So recently VEON announced that they will sell their Russian operations for total consideration of 130 billion rubles, representing an enterprise value of 370 billion rubles. In today's exchange rate, 130 billion rubles is approximately $2.1 billion. The sale will be paid mainly by discharging VEON's current debt liabilities into the Russian entity's balance sheet. The rationale behind this type of sale process was that over 50% of the 2023 debt note holders are Russian nominees, and currently the European Union has sanctioned the Russian National Settlement Depository so that any interest or debt repayments are not going through. So if the sale receives regulatory approval and VEON's creditors also approve it, it will be concluded in June 2023. Looking from pure value perspective, without taking into account any political risks, this transaction will destroy some shareholders' value. However, it is now more important for VEON to deleverage their balance sheet, as currently they don't have any access into debt financing markets. The $2.1 billion is still fair sale price given the current situation. So VEON's net interest debt is around $5 billion. Of that $5 billion, $2.7 billion were Russian entities' debt obligations. On top of that, VEON will receive $2.1 billion sale proceeds, which will be mainly paid by deleveraging VEON's balance sheet debt notes into Russian entity. So in total, that is $4.8 billion reduction in interest debt, which will reduce VEON's net interest debt close to zero. If the sale proceeds go through in 2023, after that, VEON will be still making around 4 billion revenues, of which 1 billion is from Ukraine and 3 billion from the other markets. Let's calculate the valuation without Ukraine, as we don't know yet what will happen there. So VEON was making approximately 1 billion EBITDA, excluding Russia and Ukraine. The management is predicting low to mid single digit US dollar revenue growth over the coming years and stable EBITDA margins. They are also targeting 20% capex intensity in the coming years. So 1 billion in EBITDA minus 20% capex from 3 billion revenues is around 600 million spent in capex. That will leave 400 million before interest and taxes. As they will be pretty much debt-free after the sale, interest cost is insignificant. Then taxes in these markets are approximately 30%. I didn't find the breakdown of their depreciation charges by country level, but let's just assume that it will be in line with capex, so taxes will be around 120 million. That leaves still 280 million in net income, of which they will need to pay some withholding taxes if they want to pay it out in dividends. But let's just say this business is capable of paying around 200, maybe over time $300 million in annual dividends, and the balance sheet should be debt-free after the sale process. On top of that, they do have additional 800 million potential asset sales that they are planning to execute in 2023 and onward. Also, if the Ukrainian war ends, they used to make around 600 to 700 annual EBITDA there, and they spent only like 200 million in capex annually. So if the war ends in Ukraine, that may add another 300 million in annual potential dividends. Although I expect that capex in Ukraine would be on average higher than what it was in the previous years, but still Ukraine would offer a significant additional free cash flow potential if the war ends. So I think my previous base scenario still fits quite well for the valuation model, where they can pay out 200 million free cash flows in dividends annually, and the free cash flows will increase at 4% rate each year, as 4% should be very likely growth rate for their operating markets. So overall, from pure value perspective, the price for their Russian business was a bit low, but at the same time, the sale was probably necessary in order for VEON to service their debt obligations, and this will remove the political risks. There still needs to be approvals for the sale, and depending where the ruble exchange rate moves over the 8 months, it will also impact the final sale price. However, I think this is overall positive news for VEON shareholders.